We also have a look at hog markets this week with Iowa State Extension livestock economist Schulz. The USDA's latest quarterly hogs and pigs report, released at the end of June, tallied all hogs and pigs in the country at 68.4 million head, the highest June 1st inventory since estimates began in 1964. The pig crop from March through May was also the largest since 1971. Markets showed strength during the first half of June, but began to slide mid-month. We started by looking at what led to the strength before the reversal when we talked with Lee Thursday morning.
Well, I think it's a variety of factors. First, we can look at really the market's been this year trading on steady supplies, anticipation that supplies are going to be a bit higher than last year. So I think that's really priced in the market. But really, I think the market's been trading at, especially when we look in June, was the speculation that we're going to continue to see really increased purchases from China, Hong Kong, that really robust export demand that's going to really help eat up some of that extra supplies that we have. And I think that's really what we've seen drive the markets. Also, the rally in the corn market did help, I think, support what we've seen in the futures prices for hogs gaining.
Is that partially what caused the drop then starting mid-June?
I think it is a bit of the flip side there. We did see really corn prices back down to pre-rally levels, really corresponded to similar price declines in the hog prices. Also, I think when we look at that export trade, a lot of our data is a little bit dated when we look at April trade for the monthly data. And so when you're looking at some of the weekly data that is official but really not the official numbers, points to maybe a little bit under what we expect, maybe underwhelmed expectations a little bit. And so I think that's pricing into the market. Also, anticipation that supplies are increasing with hogs, as we see now a seasonal increase. June was actually a rather large slaughter month, and I think market participants really got a handle of what that did to pork supplies.
You mentioned Asia. Can you explain just how important China and Hong Kong specifically have become to the international export market?
Well, when you look at those markets really have a potential for explosive demand. I think a lot of times we really point to 2011 as a time when there was some explosive demand there. They are the number one importer of pork. Really, that is a target destination for a lot of exporting countries. When you look year to date for the U.S., there has been significant gains of exports to Hong Kong, up about 61% year to date. Mainland China up over 170% year to date. And so with their tighter supplies, due to some herd reductions and some health issues in their herds in China, that really does point to likely increase of those exports. I think the real question is how large can those exports get here in 2016 and into 2017.
Are there implications to the export market with a stronger dollar and potentially a more volatile euro?
Well, we've been facing the dollar situation for some time now, and we've seen that impact on our export markets. It makes U.S. pork more expensive relative to our competitors. When we look at specifically the Brexit and the euro situation, we did see a bit of strength in the U.S. dollar because the U.S. dollar was viewed a little bit more safe during that situation. We've seen that come back down a little bit. But when we look at specifically, the Brexit situation, EU is not a major destination for U.S. pork. I think it's less than 0.5% of our volume, but they are very, very much a major competitor as well. And so when we look at the strength of the U.S. dollar versus the 19 countries that use the euro, that does have implications for our pork trade and puts them a little bit more at a price advantage with their weaker euro.
What did June's quarterly hogs and pigs report show that you thought was a big takeaway?
Well, I think not too much all that surprising. We knew inventories are larger. We've broken records the last several quarters. If you look at a month over month or a year over year standpoint, a bit of a surprise was, I think, when we looked at pre-report expectations, expected to come in even to maybe 1% year over year higher. It actually came in about 1% to 2% year over year higher. So when we look at it overall, a bit bearish when we look at the inventory numbers.
What's your price forecast for the rest of the summer, and then how do you think per head profits will play out through the rest of 2016?
Well, I think, when we look at the prices, very much going to be dependent on that demand situation and looking towards the export markets. We know slaughter is going to be 1 to 3% higher for the rest of the year here. For the third quarter, I'm really looking at prices 75 to 79, and we're looking at Iowa, southern Minnesota cash prices. That's going to be very much driven by what we're seeing here in July and August. When we get into the fourth quarter, big question mark there. Right now, I think we're seeing prices about 62 to 66 on a cash market basis. There could be a few weeks that we do drop into the $50 range, depending on what slaughter levels are. First quarter next year, I think we're going to be a bit better at maybe 63 to 67. And then second quarter of 2017, we're looking right in that $70 to $74 range.
Per head profits?
For per head profits, I think second quarter, third quarter here, what we've seen is about $22 per head profits. Fourth quarter, we're looking at right around break even to maybe $1 below break even. First quarter of next year, similar story, break even, maybe $1 or $2 above break even. And then second quarter of next year, we're looking right in that range of $14 to $16 per head profits.
The USDA's next quarterly hogs and pigs report is scheduled for release September 30th.